Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. I hope you are having a great little hump day. It is Wednesday, the middle of the week. We've got these impending doom numbers coming up here soon, which we're talking about September 13th, the CPI data release, and then September 21st, 23rd, around that time, after the FOMC meeting. In the short term, I did want to follow up on a trade I was speaking about yesterday. And what we talked about is the 2-hour time frame. And I'm just going to get this line off the chart here. And we said, based off of the four drive philosophy, so we got 4 lower highs in price versus 4 higher highs in RSI coming back from this point right here. 1, 2, 3, 4. We're looking for a move down to the 2618 fib based on the prior retracement. Now we've got most of that move, and that's why some people take profits at the 1618. The 2618, I like to front run that position and put a take profit in somewhere around there over the next couple of days. And currently sitting on that trade right here. Not a bad trade despite the market bouncing back a little bit right now. So again, not financial advice, not a financial advisor. So why is the market bouncing back right now? Well, stocks are rallying and Dixie is coming on down here, and I think we can apply the same, not the same philosophy to the dollar, but a similar philosophy in a sense where, what are we doing here? Coming back from this point right here on the 2-hour time frame, we'd have 1, 2, 3, call it 4 drives of hidden. Excuse me, those are higher highs coming back from this point. Let's see, those are higher highs. Okay, we got 2 drives right there. So 2 higher highs in RSI. No, we don't even have any. What am I talking about? They'd have to come all the way back from this point right here. Yeah, higher highs in price, lower highs in RSI. That is 4 drives. So where would we be looking for a move? Back down to the green 55 on the dollar on the 2-hour time frame. And on the 4-hour time frame, that's probably going to line up right with the yellow 21. The dollar's been extremely bullish here, extremely strong. At some point it is going to cool off. The fun can't last forever. Volatility's ticking up and Stokes are crossed down on the 2-hour time frame. On the 4-hour, we're just beginning to decline. We're just beginning to decline here. And could we apply the same philosophy here? Yes, we got 4 drives. So at a very minimum, I'm looking for a shot back to the bottom side of the range, and the dollar could come as low as the 108 target, or even down here, around 108. And that would be good for the markets to be putting in a bit of a rally in the face of, a mostly downwards market. Now, do we have the same lower highs on the daily time frame? No, we do not. Coming back from this point, we would have 1. And this isn't even a confirmed local high, right? This is not a confirmed local high. So we have just been rocketing to the moon. As long as we are holding the 9 exponential on this one, I am expecting the price to continue onwards and upwards. But momentum has just crossed down on the daily time frame, and that'll be staying down as long as we're below 110.25 at the moment. What about the 2-day? 2-day is going to cross down 2-day below 110. And then the weekly has been very bullish on the dollar. So as long as that guy stays bullish, it's not going to look pretty for the rest of the market. Not going to be pretty at all. So that's nice. That's nice. Huh. Yeah, I had a little bit of run-in with KuCoin this morning. I transferred some money, and you know how it goes, just kind of evaporates sometimes. No, I'm sure it's still there. I just got to do a little more research. So let's jump into the meat and potatoes of today's video. We're only 5 minutes in, and so what do I want to talk about? Anyways, yeah, back onto Ethereum. That 1440 target, definitely in place. Bitcoin, the same thing's gonna run on Bitcoin, except for the move we talked about has taken place. And I'll just get the fib out here and show you what we were talking about. Yeah, so we've been talking about 18,000 for some time, and it was based off of the 2-day time frame and the 4 drives of hidden bearish divergence, which was coming back all the way from this point right here. And if you look, if we go wick to wick, we were talking about 18,000 last week, made a few short videos about it. Ooh, I really want to add to some ETH short here. But am I going to have time to do it? Not while I'm on stream, unfortunately. So again, we got, I'm just going to go over this principle here. 1, 2, 3, 4 higher highs in RSI. And then we've got 1, 2, 3, 4 lower highs in price. Again, 1, 2, 3, 4. So then we do a bearish retracement from the prior wick to wick in a more volatile market, and that typically gets you the downside move. What else do I want to bring up on the CME time frame? If we use the CMEs and we go candle body to wick, yeah, it's still in play, and we're looking at 17,500. which is kind of right in line with the premiums we've been seeing here on spot price action. I really want to add to this short on Ethereum, but I'm going to withhold myself here shortly. I think Dixie has a chance to rally still today, but I wouldn't be surprised if it does cool off at some point. So yeah, there's been a bit of a premium over spot, or discount over spot. As you can see, Bitcoin's at 18.9 right now, and CME's is 18,770. So that still shall hold true. Okay, so 2-day time frame. What I want to point out is, again, from expansion on the 2-day time frame, and we're talking about the BWP. Once this regains the exponential, and typically when you get above 20 percentile is when I define expansion. So coming back from this horizontal right here, close enough is close enough. And in this case, we get above 20 percentile. The average move to the downside on CMEs is about 39%. So let's call 40%. That's 40% from expansion, and the stochastics get the direction of the price movement. I think it's something like 70% of the time. So pretty accurate indicator. In combination with that bearish divergence, even better. But what would 40% coming off price action from this level look like? Let's take it from this wick right here. And 40%, so 39% gets you down to 13,425, and 47% is going to get you down to down to about 11,575, and I'll go into that in a bit more detail as to why over the next couple of days I have these two targets laid out for CMEs. All right, right on to our next chart here. I'm going to go back to the 5-day, which is a more powerful time frame, and we're looking at spot price action here, and this one has been very accurate in recent times. Again, when volatility begins to expand, the stochastics, when they are crossed down or up, that will catch the momentum of the trade. And I would denote this, in full motion as soon as we take out this wick at 17,675 roughly. And typically this type of move, if volatility continues to expand, the average move is about 45%. So what would 45% off of price action from this level look like? And again, we define expansion as we regain the exponential and we get above 20 percentile. And we will be closing a 5-day today. So if we see volatility continue to expand and we remain below 21,613, looking at this move to kind of play out. So 40% gets you down to 11,000. 42% gets you down to 11,585. That would be my target. The average days this should take is somewhere around 30 days. And again, this has been a rather perfect signal just over the past few times. Again, you match up volatility expansion with the direction of the stochastics, should get you the direction of the move to the tune of something like 45%, right in that range. So that's it for today, guys. Pretty simple. Oh, getting down to the shorter term time frames here. We are getting a bit of a pity bounce, as you can see. The volatility is beginning to decline. Stokes will cross up here in the next 4 hours if we do get back above this guy. And more importantly, I've got to go to a meeting in about 10 minutes here. So really what I'm looking for is the next expansion play to the downside. And I would say this: if we do close any kind of a 4-hour back above 19,000, that will look good for a move up to the 21, and possibly, all the way up to retest this breakdown area. What I would like to see is for it to reject off the 9, usually off the first pass. On the 9, you get a rejection. First pass on this one, you get a rejection. And you can see that going back to this last breakdown right here. As we got to the 9, rejected. As we got to the 21, rejected. And usually the third or fourth time it's going to break through. So we've got quite a bit more dancing around to do here. And because the 5-day signal will be closing today in 3 hours and 15 minutes, I would be, a little bit more on the cautious side, looking towards some downside action. Okay, that's it for today, guys. Hope you have a blessed and highly favored day. We'll be following up here tomorrow with some more ideas for the short term and the long term. Thanks, and have a blessed day.